Welcome to the REI Hacker Podcast, where we unlock the secrets of real estate success. Join us as we dive into the journeys of top investors, mentors, and industry experts. And now, let's hand it off to our host, Benson Juarez.
Welcome, everybody. Thank you so much for being here on this edition of the REI Hacker Podcast. Really excited to talk to my next guest. His name is James Brown. James is the co-founder of Colorado Co-Living, the hybrid real estate investing model, and Accelerated Capital. He's also the host of This Month in Real Estate Investing and an author of several books on real estate investing and everything surrounding it. James, thank you so much for being here. Really appreciate you taking the time.
Yeah, I'm glad to get on here finally. And man, I was looking back through like all your other guests. You've had some great guests on your show. So I'm honored to be part of that. So that's very cool.
Well, I'm honored you're here. And we have had some pretty good guests, because there's a lot of value in networking with people who are doing exciting things. And it's always been my goal over the years to try to get in the right rooms. And it can be a challenge unless you're bringing something to the table. But if you're aiming upward at people who are in rooms that you're not in, and you're trying to talk with people who maybe have had a lot more success than you have, then, a podcast is a really good way of providing value, giving them, basically a place where they can amplify their message. And it's worked well. And I know you do something similar, right? You're doing a lot of different things to try to get in the right rooms, right? You're one of the founding members of several, investment groups, right? And masterminds. So like, what's the value that you find in these kind of collaborative environments and networking with the right people, and how does that bring value to your business?
Yeah, well, definitely just sharing knowledge. Every guest you have on, or every show you're on as a guest, that host has something to share, and I do too. And so we're kind of leveling up together. So that's kind of one of the big ones. And then potentially doing business together, is my video freezing on you? Something's wonky
No, I think
there.
it's okay.
Oh, no, it's got up. Anyway. Potentially doing deals together, like you and I, we've known each other for quite a few years now, run the Colorado Cash Flow Club together, but we haven't actually gotten on a one-on-one call until just the other day. And it was like, gosh, we should have done this a long time ago. I kind of had an idea of the things that you do with Privy. And by the way, I'm psyched to be able to have access and start using Privy. That's super cool.
Yeah, I'm excited too. There's so many good things that comes from collaboration. And there's a lot of people out there that have a scarcity mentality, and they think that they have to take to get. And it's just the opposite, right? Like if you are a giver and you give without expecting anything in return, and you help people who need a hand up, and collaborate with people, it doesn't always have to be a win-win. We were just talking about like, am I doing money making activities today? Right. And that goes with like collaborating too. Like it isn't always going to result in cash at that moment in time, especially if you're helping somebody who doesn't have anything to offer you. Right. And it's just like, okay, but at some point in time, like what comes around goes around. And this idea of karma, that maybe, you can get something in return, but if you just go into it thinking I'm going to help somebody, maybe you will make some money from it.
Yeah. I've always been that way, and I think even more recently as I've gotten into this business, realized how important that is. Because this business specifically it's a people business, and you can't do it alone, so it's super important. And then I read The Go-Giver, that book. I was like, that really connected. It's like a good reminder, like, hey, give, and it might come back. I don't know. And, like I've got my coaching program now. And of course it's paid, right? But I love helping other people level up with me. And I don't know. Like my parents were teachers, so I kind of have that like bred into me, just that like sharing and helping other people learn.
Yeah. I think, and it's pretty fulfilling too. Like some people say they do it and they're selfless if they teach and if they help. But I was a mentor for an at-risk youth group for like 8 years in Colorado. It's called Colorado Youth at Risk.
Yeah.
And one of the first things they teach you is if you're coming into this program and you're expecting to be completely selfless, you're not going to succeed. And so one of the first things they actually worked with us on when we were setting up to get ready for the program where we were going to go meet our mentees was like, what's in it for you? And it's an important lesson that like, even if you just feel good about it, that's still positive. But if you're completely selfless about it, then maybe, and at least in the minds of the directors of this program, you weren't going to get the full benefit of participating in this mentorship program because you didn't identify what you were going to get by participating. I thought that was a pretty interesting lesson.
Yeah. And I know they've done some, questionnaires, research with nurses, and a lot of them go into it and end up becoming unhappy because the people that they're helping might not really be thankful, I guess, grateful,
Yeah.
and then it get kind of disillusioned with it. So they've got to have another reason, like you said, to do that, and maybe something besides the money. But
Yeah.
yeah, yeah,
There's all different things. I mean, you're now obviously really deep into real estate, but you haven't always been doing this. You were in the creative side of the world for many years, and then eventually you got into real estate. What's like your origin story moving from where you started in your career to transition into real estate?
yeah. I was a graphic designer and creative copywriter for 25 years. So that's how I started. And that's a collaborative process, the whole creative process. I was working with art directors, marketing managers, other creatives, photographers and other writers, that kind of thing. So it was a very collaborative process, I guess, similar to this.
Yeah.
So then I
Has
transitioned
any
into
of
real
those
estate.
skills that you learned in the collaboration and creative process and graphic design and that side of the world, has that kind of flowed over into how you approach real estate?
Yeah, yeah, totally. You know, uh, you said something there that made me think. Oftentimes I'd go into a project like maybe it was just a single owner, you know, that they don't know marketing, they don't know graphic design, they don't know how to write copy, all that stuff, and so I would go into it like I'm the expert. You're paying me to tell you what I think is the best, and not they wouldn't. Sometimes they wouldn't listen. They're just like, I want it this way, and that was super frustrating. But then you get into like working in a corporation with a whole team, and I wasn't the only expert. And sometimes somebody else would have an idea. I would be thinking one direction, and they'd say, "Hey, we should go this other direction," or that's what we think. And oftentimes, like, I would at least consider it, and we'd sometimes go that way and be like, "This is great." Like it's not just me, because I'm fallible. So it was good to kind of have a second, third set of eyes on it.
Yeah.
So and it's the same with real estate. I mean, there's a lot of moving parts and numbers and different ways of approaching things. So it's good to have second set eyes. That's like having my partner Toby is really fantastic because we kind of have similar but separate personalities and skill sets, and I love running stuff by him, and same for him, like copywriting and stuff. He's like, "Hey, does this look good?" And I usually just destroy it and start over, but it's like because that's the world I come from, and that's my stronger suit. So it's good to
Yeah.
use our strong suits and level up.
Yeah. And I mean, because in real estate, there's a lot of places for marketing, right? There's marketing your brand, there's marketing yourself to attract clients, and there's a lot of things that you got to do in this business that's marketing and sales driven. So having that background probably helped you along the way.
Oh, totally. Yeah. Yeah. That's super important.
So when people think about real estate, they think about usually rental properties, right? That's kind of what people think about from the outside looking in. If you're in real estate, you own real estate. But there's lots of different exit strategies, right? Then there was like the fix and flip phase where it got really big because of HGTV, right? And everyone was thinking about flipping properties. And then some time along the way, people got, more interested in wholesale. But then there's like this space they call creative, which encompasses a lot of different strategies, like subject to rent to own, co-living, wraps, like all this world. And that's where you've thrived. Is it any mistake or coincidence that you are thriving in a space where creative is like the gist of the whole program?
I think you nailed it there. Yeah. I come from a creative world and transitioned into a different creative world, which I'm glad, because when I stepped away from the graphic design part of my life, I was like, this real estate's going to be a grind. It's going to be dog eat dog. It'll be all about the numbers, which it is that too. But then I got into this, and I like the collaborative part of it, but I like the creative side of it. Yeah, and it opened my eyes when I started really researching, going to networking events and reading and listening to podcasts, all of the, just consuming all of it. Because I was like everybody else. All I knew was you fix and flip and you make some money, or you buy a long-term rental. Right. And then I knew there was apartment buildings. Somebody had to own those, and commercial buildings. So it took a long time for me to kind of wrap my head around all the different things. But being on the creative side, it took that curiosity that I always had to start learning about all this stuff. And so, yeah, the creative side really draws me in. So
there's the three, not three, but there's the main buckets that we know of that people talk about when they talk about creative. Have you ever stumbled upon a new creative strategy that maybe people don't talk about, or something that you think that you've kind of pioneered?
Well, so, like I said, we've looked at all these different asset classes and strategies, and we landed on lease options, aka rent to own, and just within that, there's a lot of different ways of doing it. The traditional way is like you've got a property and you make it available rent to own, so you rent it until somebody buys it from you. But you can do it the other way. You can have a buyer, like we do. Mostly, we do all the different ways, but find a good qualified buyer that still can't get a loan, and then we'll go buy a house for them that they picked out. That's my favorite. And so there's some subtleties and different ways of finding buyers and finding properties, structuring the deals. So that's I love the creative side of that, and just the other thing I love about rent to own is we're helping somebody that got told no by a bank, so we're giving them hope, by actually getting them on the path to actually buy a house, and then we're making money on the other side of it too. So
what are the risks in that strategy? Because there's a reason a bank told them no, right? And traditionally it's stuff that bank bureaucrats, they have like their risk they have to mitigate by not lending money to someone who's going to default, and then they have to spend all the cash to take the property back. So they're mitigating their risks. Mostly it's things like bad credit, or they have income that's not documentable, or they've got questionable things in their past that maybe is credit related but maybe not. where do you see the opportunity there without doing anything risky?
Yeah, I mean, there's always risk in anything business and real estate related. So yeah, we're kind of filling that gap. And there's been rent to own industry's been given a bad name for good reason. Like there's a reason it's been given a bad name, but it's usually by not being as selective with those buyers, letting people into a house and renting with no chance of getting a loan. So we're way more selective than historically, or some companies and individuals that either they know they're putting somebody in a bad spot, which is messed up, or they just unintentionally put somebody in a bad spot because they don't know what the likelihood is, the good likelihood of that buyer being able to eventually get a loan. So that's where we fill that gap. So that's typically who we can usually help. Not people that have habitually bad credit. I've seen 4 pages long of like dings and debts, and it's like, that's a bad sign that it's like that massive, right? So we're looking for people where life happened to them. They might have gone through divorce, or there was a death in the family, medical issues. COVID screwed a lot of people up in different ways with their jobs. So we look at the big picture, and then we require a decent amount of money paid up front for their option fee. And so that's the more skin in the game that the buyer has, the more likely they're going to do what they need to do to get that loan, because oftentimes it's up to them. So we come up with a game plan from the beginning that's agreeable by everybody and realistic. And we work with lenders to figure out like, what do they need to do? Like, why can't they get a loan now? Because there's a lot of check boxes those banks have, and there might be 1 or 2 things, and it's like, they're still good. They make good money. They've got some money saved up, but they got a bad credit or lack of job history. Like maybe they switch from W-2 to 1099. So it's like more of the self-employed people like us.
Mm-hmm.
Banks don't like self-employed people, and because it is riskier in some ways, but that's usually who we can help, is people that they might need 1 or 2 years income, but we can see that they make good money. But they typically, as all of us entrepreneurs are trained to do, is like write off as much as we can legally and don't claim as much income as you might. So you got to flip the switch on that and get ready. So the bank's like, okay, we can help you now. So it's usually like, ideally it's just time. They just need time being self-employed, and then maybe they have some credit issues. So, and then we've got, people that we work with that can help them along if they need help figuring that out. Because credit can be, all sorts of things can affect your credit. So having a specialist help them along.
Yeah, there's lots of services out there to do credit repair and
Yeah. And some are good
reputation.
and some are bad.
Yeah.
Yeah.
So let's talk more
Or they've
about
got,
how the industry got this negative perception. Where is that really coming from? Is it who's saying that it's bad, and what's causing it? And my intuition is that if you are say like a rent to own company, and you might take on somebody who wants to get a house, but they won't qualify for a loan, and they're probably never going to be able to qualify. But people are telling them that they will, giving them
yeah.
false hope, but then taking that option payment up front and knowing that they're going to get to keep it because this person's going to fail eventually, and then they get to get the house back, and then that person never gets the house and they lose their money. Is that
Yeah,
really the scenario we're talking about here?
exactly. Yeah. They have low barrier to entry, like very little money down. and well, a bunch of other things where they probably won't be able to buy. But so on the investing side, it's like, oh, you got somebody that's got hopes, and they're in a house that they think is going to be theirs, and so they're going to take care of it more than a regular renter. So that's one benefit for us on our side. But if you set them up so that they can't, that's bad. I mean, the two big companies that were in this space just pulled out at the beginning of the year. So there's this huge gap to fill. And there's speculation over the different multiple reasons probably why they pulled out of the market. One is just it's hard because interest rates are high, prices have kind of held, they're starting to come down. So it was like they were buying high and maybe less likely that those end buyers can buy at their future purchase price. So yes, first of all, finding people that have some skin in the game, not just letting anybody in, and then really digging into what they need to do and setting them up with a plan. And I'm always looking at like, what are they paying now, like for the rent? What is their mortgage going to be when they go get a loan with maybe 3.5% down? What is that? Like, we don't want it to go up because they might not be able to afford it, And then the purchase price, we don't jack up the purchase price out of reach because, we want it to be fair for both sides, but also it's got to appraise,
Mm-hmm.
It may not have to if they had some extra money to put into it and wanted to pay more for it, but we're not going to like set it up like that from the beginning. We're just going to make it reasonable. So,
Yeah.
but yeah, I mean, there's a lot of fears from all sides. I work with a lot of agents and lenders in my business, helping them help clients, and they've got a lot of just fears, but also a lot of misconceptions over why it's bad or how they just think, oh, I'm just staying away because they don't understand how it can be done right. So I don't know if I teach a continuing education class for realtors on rent to own. And so I like to have lenders come to that too. So everybody's on the same page and learns, here's why it doesn't work out sometimes. And here's how you set it up and how we set it up for it to actually work out. And every time I teach that class, people come away like, wow, I didn't know that. Like, thank you for teaching me that, because there's so much opportunity for agents and lenders to actually help people and not just say no, throw them on a drip and send them on their way.
Right.
Maybe call back and get that client back, but we can actually help them get into a home. Not everybody, like I said, we're selective, but so that class is really eye-opening for people.
Yeah. So what are some ways to find those people? Because they're not just like on a list someplace, likely, but you mentioned that you work with mortgage brokers and agents. And I know like as an agent, if you're starting to work with a buyer, the very first thing you have them do is go get pre-qualified.
Yep.
And I don't know what the percentages are of people who don't get pre-qualified, but now you got someone who's not. And so these agents could refer them to you, and then you can start the process for them. Is that kind of your approach, or do you do any sort
Yep.
of marketing out there, like, PPC marketing or other approaches to attract people who think they can't get a loan or can't get a loan?
Yeah, you can do that. We've done that. But yeah, I'm mainly just kind of networking with agents and lenders.
Yeah.
The ones that take my class, those are great because now their eyes are open and they're more
Like bird
open to
dogs.
it. Yeah, exactly. So it's cool because we're all winning. In fact, one time I was putting a video together like, hey, we did this deal, got these people in a home, and there was like I could think of like 8 people that were involved in the transaction. Everybody, you know, made money and helped those people. And then I kind of went back. It's like, wait, there's that person. It was like 13 different people when I really got granular. There was a septic. It was just a rural area, so septic system, a surveyor, water testing, and then all the normal ones, insurance broker and appraiser. And wow, there's quite a few people, but basically, yeah, I'm working with at least one or two other agents on the buy side and the sell side, plus oftentimes two different lenders. Yeah.
So in this ecosystem, well, in all transactions, there's two sides, right? The supply and the demand. In this scenario here, where and actually it flip, one side could be supply, and the other side could be demand. Are there more people who need this kind of a program who can't get a loan than there are investors that will do these kinds of loans, or is there more investors waiting and they just can't find enough people who can participate in these programs?
For us, it's been more supply of the people that can't buy, the buyers and buyers. Because like I said, we're being selective. There's a huge portion of the population. What is it like? I've heard 75% of the population just can't buy a home. They might be able to buy a condo or something, which we stay away from. But huge population, they want to own a home, but they can't. And then there's that sliver where the bank's saying no, they don't have like a down payment assistance program or a bank statement loan program, or there's something missing. There's always check boxes where they've got a good chance of buying a house, but maybe just not right now. They just need a couple of years to have that time and work on some things. So that's that sliver that we're looking for that we can't help. So,
So you got plenty of investors and there's plenty of money. You just need more people.
yeah. I mean, it's always good to have more investors as we get busier and busier, and we are going to here. I mean, with the big players out of the market, like there's huge opportunity. So, I mean, I'm playing my cards, and for lack of a better term, and kind of setting up to like grow and fill that gap. So, but yeah, you always need investors. So, I mean, we've got a group of investors wanting deals, but maybe we find a deal in Atlanta and they're here in Colorado and they're like, I'm not comfortable with Atlanta. Well, need maybe be better to find an investor in Atlanta, or they're just in their cycle. They're not ready now, or, Denver's a high price market. They're going to need 20% down on a $600,000 house, 120 grand plus closing costs, where they could go to an Atlanta and maybe get two houses for the same price, So every investor is different. They're in a different cycle. I've got a good friend who's done the most investing with us. Probably done, I have to look back, say 6 deals. But we'd get him teed up with one, and then he'd be like, "Well, I'm not ready for another year." So sometimes the timing's just not right. But
Right.
if there's good numbers, there's money. There's plenty of money out there. As long as it's pencils out, people are going to jump on it. And when they realize the benefits of rent to own and like helping people, like I had an investor that stuck with us on a kind of a hairy deal that I would have walked away from it. I didn't. I was kind of stuck in it, but he and his wife felt really good about the fact that they were helping somebody buy a home, So, but yeah, having somebody that's got a owner's mindset versus just a regular renter makes all the difference. They're not vacating in the middle of the night. They're not punching holes in the wall. They take care of the property because they're planning to own it. So when investors realize that, if they're new, sometimes they don't really get it. But it's more the tired landlords that are like, I'm done with this. Long-term renters, then they're like, they understand all the benefits of rent to own. Like, let's do it. Let's rinse and repeat. Every couple of years, just do another one or two, or they can do multiple at one time too.
So when an investor's looking at those two different strategies and just being a normal landlord on a rent to own, I'm sorry, on a long-term rental, versus participating in a rent to own situation. Like, what are they comparing in their minds to determine which route they'd rather go down? And what are the pros and cons of those two approaches if you're comparing those two?
Yeah. So one is vacancy. So like the way we do it, we call them reverse lease options, where we've got the buyer first and then let the buyer pick out a house and we buy that for them. We know up front that they've got money to put down for their option fee. So that's insurance for us. So you got that. You don't have that, security deposit with a long-term rental. That doesn't compare to like getting a larger amount from a rent-to-own buyer. Before we close, we've got documents signed. They're going to move in right away, once we close. So we don't have to worry about vacancy. We don't have to worry because we've already got the amount of rent already set and agreed upon by both sides. So we don't have to be guessing like, oh, I'm going on red or like, shit, I hope I can get $4,000. But then reality sets in and it's like, oh, the market shifted and now I can only get 3,200. Like, oh, there's no cash flow. Like that's a big guessing game where we've already got that figured out up front, Then we set the tone and have an agreement where they take care of some of the maintenance and repairs, the kind of owners in training. So we have a special way that we do that where everybody's on board with that. So we're not having to deal with just kind of the calls in the middle of the night. That's what's great about it is like we can do this in another state and not really be worrying about things that you normally would with a regular rental. And we always have boots on the ground, somebody that can check in if needed. Usually have an agent that helped us with that deal, so we got somebody. We can get property management if needed too, but it's a much lighter lift. So usually we can get a discount because those property managers realize this isn't going to be as much of a pain as a long-term rental. So I think it covered most of the things.
So overall, there's
also
more pros than cons with this approach. It's just
yeah.
newer, and that's why you don't see a lot of people doing it.
Yeah, well, I mean, they've been doing it for years and years, doing it the right way. Maybe that's newer, but although, yeah, I guess people have been doing it the right way and the wrong way. People are people for a while, but in my mind, it's kind of newer feeling because I've gotten into it. But the other thing is like you've got that velocity of money too. So most people need between say 1 year and 3 years. Texas, it's limited to 3 years max. So you're turning your money over, kind of like fix and flipping. So that's, and I guess the downside, you kind of brought that up, is like they might not end up buying, and that's often their choice. Life happens. Sometimes somebody can't buy it, but they may just choose. I want to move. Something's changed, and they walk away. They're not likely to walk away with a large option fee, but if they do, we've got that money sitting there that we can use to go find another rent-owned buyer, find another renter, list it. Basically, it's like any rental. If somebody vacates, you have all those options available to you, and you can make a business decision at that point. Do you want to stay in it, keep the house, or sell it, or keep going? So,
how do you normally structure the investment side of it? Is it usually like just like one investor per property, or have you seen it done through a fund where you can have a bunch of investors investing into a fund that then goes and buys the property?
yeah, we just do one investor. We've done two. Two of my buddies that are like, oh, let's just do a JV and split it.
Mm-hmm.
maybe down the road, yeah, we'd look at doing a fund. As you know, you've got your fund. There's cost and complexity to setting up a fund, but I mean that's how the two big players that just exited the market, they had huge funds
Right.
behind them. So it gave them some flexibility. They could just kind of go make offers really quick and didn't have to like find the right investor. So, but that's the way we do it.
Yeah. I think if you were going to scale it at some point, a fund would make sense,
Yeah.
especially with the multi-state thing, because then the investors aren't as worried about whether or not they're present in a specific state. They put their money in the fund, and then the fund just finds the properties, and they'll know which properties they're invested in. They're just not as worried about having to be boots on the ground.
Right. Exactly.
I mean, potentially.
Yeah.
So, and I've never
Yeah.
heard of a fund that does this. There's lots of different funds out there, but I've
Yeah.
never heard of one that focuses on rent to own.
Yeah, you have
Have I?
BlackRock. BlackRock.
BlackRock.
That's who was behind one of the big players.
Okay.
Yeah. Yeah. That's a huge fund. So they were doing it.
Interesting. God, I wonder why they got out. It's,
Yeah.
I wish there was
Well,
more of a backstory to what the financial decision to get out of the market.
well, I know they were wrapped up in a bunch of lawsuits because they were, I mean, I don't know all the details of those lawsuits, but if you've got that low barrier to entry, maybe I don't think they set their price to purchase in the future too high. From what I'd heard, it was close to market appreciation. A lot of people point fingers, and of course they're a big company and big fund, and so people go
Yeah, they're
after
viewed
them.
as like the empire, right? Like they can do no
Yeah,
good because they're so big and they're, so rich that
yeah,
how could they have the best interest of someone else in mind, right? Like, I don't know.
yeah,
I think it's probably a case by case situation. And I think probably there's some people that probably weren't taken advantage of, but they see an opportunity here to be part
right,
of some lawsuit, or maybe I'll be class action. I'm not sure, because they're like, well, we can try to get some money back, right? Even if it isn't the fault of BlackRock or some executive there, that even like the media is going to make it look like it's this poor little person who was taken advantage of, right?
right,
When maybe there really wasn't a legitimate case there.
yeah. Classic landlord tenant. As the
Yeah.
landlord's the big bad landlord, money grubbing, right? And then you've got this faceless corporation. It's like, just go after them. What do you got to lose? So I'm sure a lot of it had to do with that. They're just like, ugh, all right. So luckily I
It'll be
haven't
interesting
gotten
to see how
wrapped
that
up in
plays
it.
out.
Yeah.
So I've heard you mention that, so you were born in Alaska, right?
Yeah.
And so you're really outdoorsy, and you've lived the most of your adult life here in Colorado. But there was a story that you would go and get on your dad's fishing boats when you were younger,
Yeah.
and that he was one of your first inspirations to actually get into real estate when he said to go and do that a house hack with that duplex.
Yeah.
What other lessons did you get from your dad or your family that you've carried along the way that were important to you?
Yeah. Just work hard. My dad is a grinder, man.
Yeah.
Like he'll be 85 in August, and he rides a bicycle about 20 miles a day in the summer when like, and then he does little exercises in the kitchen while his coffee's brewing. He'll get on the treadmill. But like he was a teacher all winter long, most of the year, and then he'd turn around and like load up and go work his butt off on a commercial salmon fishing boat all summer and just do it again. Like the guy doesn't stop. He's just a grinder. And then my mom, she's awesome. I think she really taught me kindness and, thinking of others, maybe to a fault, but, like it was good to like kind of get a balance of those kind of two awesome human beings. So they're still alive, and I try to spend as much time with them, try to draw out, stories, and they're just the best of them. So I was really lucky. And I've got an awesome brother. He's also a licensed agent in Cleveland, he and his wife.
Oh,
So yeah, they both got into real estate, and they just get the regular real estate agent stuff. They don't do the investing and stuff, but yeah.
that's cool. Yeah, it's you always hear the different stories about people in their families. Like sometimes you hear the bad, like the families, the broken families, and that can lead to some negative results down the road, especially when it happens early on in a child's life. Like some of those unconscious effects that happen to people, like we've all heard of limiting beliefs, right? Like what you think you're capable of and what you think you deserve can really affect your ability to go and be an effective entrepreneur. And it's why a lot of people are attracted to it, but they just don't have what it takes to really be successful in entrepreneurship because they don't have like the foundation like you've just described with your family, which is so cool.
Yeah.
And I mean, you are a grinder, right? Like all these things that you're working on right now and all the different strategies that you're employing. So, I mean, man, congratulations. Like you're grinding, you're making it work, you're hustling. You and Toby are doing some really cool things. Like, I can't wait to see what you guys do.
Thanks, man. Yeah, it's exciting.
Well, man, I
Yeah.
really appreciate you coming on and sharing your story and getting in the
Yeah.
weeds a bit
Yeah.
with rent to own, which is a strategy I think a lot of people should consider. And I don't know if you coach that, but I know you do some coaching. But if anybody wants to learn about what you talked about today or wants to talk to you about, rent to own, maybe working with you as an agent, how can they reach you?
Just go to Linktree, partner with James Brown. And I've got a lot of links on there. So a lot
Okay,
of different ways to connect and things to dig into there. So yeah, yeah. If anybody's got questions about any of this, happy to share. I
awesome.
like, especially the rent to own. I want people to do it the right way. Like I get calls all the time from people like, "Hey, I got a house and I want to do rent to own," and I'm like, "Okay." I start asking them questions and steering them the right way. Like, let's just do this right, because it doesn't help anybody when it doesn't work out. So let's give them that guidance. But
Awesome.
yeah,
Well, everybody who's listening, if you want to work with James, we'll put the links to his link tree in the show notes so you can reach him easily. But James, thanks again for coming, and everybody who came to check out this episode, keep an eye out for more amazing guests like James in the future, where we talk about entrepreneurship and business and real estate investing and just a bunch of just exciting stories and inspirational stories to help you along the way. So thanks for listening, and we'll see you next time. Take care.